will any of this really help homeowners? Here to discuss is Michael Ashley from Lend America. Michael, good to see you. You know, an interesting piece in the Wall Street Journal, Michael, saying that this may be the end of the housing crisis because finally, if the inventory of housing is allowed to clear out, it has become affordable like it hasn't been affordable in this country for new home buyers and existing home buyers, people who want to move up. We haven't seen a time like this in 6, 7, 8 years, so this could be the best of times, not the worst of times.
Well, I mean, you know, the operative word there is clear out the inventory. I mean, you know, what are we going to do with these houses that are now lingering in foreclosure? You know, there has to be some action taken to try and help these people from actually going into foreclosure, because if you wind up with a bunch of foreclosures on the market, what you're going to have is, I mean, a diving housing market, and that's not going to be good for the housing market, and it's not going to be good for the economy. So I think what you need is a two-phase plan here. You need a plan to really help people that are in foreclosure, just the way we had creative financing available to get these people in houses. We're going to have to come up with creative financing to keep these people in houses. And then, from then, we got to look at this phase two. And phase two is, I believe, using the Federal Housing Administration, like Barney Frank says, to actually come up with financing so that we can get the housing market moving again.
You talk to these lenders out there. You know them very well, and I guess I'm just wondering, what is it that you hear from them? How committed are they to helping these people stay in their homes, or do they just want to cut loose and cut their losses?
Well, you know, let me tell you, they want people in their houses. You know, the biggest challenge that these lenders have most of the time is that if somebody's in foreclosure, what they'll do is kind of stick their head in the sand and not communicate. But, you know, people need to communicate. They need to call their lender. These lenders, they don't want to foreclose, because all foreclosure does is displace families, it brings down the value of homes, and it does nothing good for the economy. So, you know, from the lender standpoint, they do not want to foreclose. They're not in a rush to foreclose because, again, it's going to just continually drive down values, which is going to eventually hurt everybody.
On the other hand, Michael, if somebody got into one of these houses way beyond their means because of one of these arms that they got into, and now we're encouraging them to stay in a house that ultimately they're not going to be able to stay in and afford, aren't we just postponing the inevitable?
Well, again, but, you know, you can't, you know, paint the whole situation with one brush. You're right. There's different segments. I mean, there's some people that are in these houses that basically, you know, the industry went to a score situation. You were just a number. If you had a 650 credit score, they just put you in a house. It didn't matter how much money you made. So, yeah, for those people that can't afford their houses, the best thing is to work out getting out of those houses and moving on. But there's still plenty of people that are in houses that maybe took these adjustable rate loans, and now the rates have gone up and they can't afford it because of the higher rate. What they need to do is come out with some kind of creative, strategic way to refinance these houses. One of the biggest challenges really is equity. One of the big things that you see is, like especially with Countrywide, is they did a lot of these loans called pay option, ARM loans, where basically you had a very, very low payment in the beginning, but your interest was accumulating and it was increasing your principal balance. So now what you've got is equity you've got houses going down and loan amounts going up, and that's probably the biggest challenge that we have right now.
Michael, stay with us if you can. We want to bring in our Fox panel into the discussion.
We have Rick Newman from U.S. News and World Report, along with Jordan Netburn from Axiom Capital Management and independent trader Frank Roche. Rick, I will start with you. Do we believe any of these lenders, and how much difference will it make to the overall picture, as even Ben Bernanke today saying that price declines and mortgage delinquencies are going to increase? We're going to see more of this.
Liz, I love this phrase, creative financing to help people buy a house, now creative financing to help people stay in a house. Makes me wonder what happened to just plain old financing, which raises the point that the home ownership rate went to record highs. I mean, we had a sort of an ambient home ownership rate for a long time of about 62, 64%. It spiked to 69% or so. It's now drifted back a little bit, but it's about 68% right now. Politicians certainly don't want to come out and say they can't really, to say, you know, a lot of these people can't afford homes and maybe they shouldn't be in homes in the first place. And that's what we're seeing happen right now.
So what you need, to reuse that phrase, you need to clear the inventory. And unfortunately, when you clear the inventory, that means a lot of people take a bath. We're going to have to either absorb that bath or we're going to prolong the agony for an interminable period, Jordan.
Absolutely. I think it's crucial to get back to the qualification of the buyer. Is there some type of a payment plan that can be worked out? Is it reasonable? Is the buyer suitable for the property that he owns? But it has to be between the lending institution and the buyer. Once the government gets in, we can't have a situation where the government has a put just to create a null and void contract or to change rates at any time. It's got to be very open. I'm all for a second chance, but we have to look at what got us there in the first place. And if we have a very open, very negotiated type of a situation, we can have the market get back into a rational condition as opposed to an irrational one.
Frank, I'm going to quote Warren Buffett from this weekend. He was talking about basically the financials, but it would apply to a lot of the lenders and even the homeowners who signed bad deals for themselves. The arsonists are now caught in the fire they started.
That's a good phrase.
Why are we saving these people? I mean, I know you can't let a billion foreclosures unleash them onto the markets, but you've got a lot of people who have kept up with their payments and they're livid about this.
Yeah. Well, it's all about political expediency. This is really the motivation for all these things, right? The hypocrisy here, to me, is quite thick, because for years and years and years, the Fed, the Treasury officials, Commerce Department has been harangued by Congress to get them to do exactly that, which is to loosen lending standards in order to promote home ownership in the economy to those that have never had a chance to do it. Now, here we are. They went ahead and did that. They reduced the standards. They created this huge mess, and now they're going to fight to keep these people in the houses again. The hypocrisy gets out of control here, and I agree, there's a lot of people just get into things they should not have been involved in.
Now, Michael, talk about promoting. You received some flack for a promotion that Lend America had, which was the housing stimulus rebate package. You sent out envelopes that said housing stimulus rebate enclosed. It was a coupon that was redeemable for $1,200, but of course $1,200 is how much you would receive in one of these rebate checks if you have a family. You were criticized for having done that. Do you apologize in any way for having done this?
I don't apologize at all. I was criticized and I was applauded. Just to go back to the previous statement about creative financing, you know, creative doesn't mean irresponsible. I mean, at a point, the lending became irresponsible in the past. I'm talking about being creative and being responsible. But now, to address your point, I think what we did was great. It was informative. What we did was, it was a marketing piece that was sent out to let people know. Everybody was focused on this economic stimulus package and looking at the fact that you can get $600 or $1,200. Well, that's not enough money to save the day. What we wanted to say is, hey, what you missed in this whole economic stimulus package was the fact that they increased loan limits for loans that are insured by the Federal Housing Administration, and that'll give you an opportunity to refinance and save money month after month after month.
Clearly you wanted people to think that they were receiving their check from the government.
Well, the idea is that we put in there the housing stimulus bonus because people could save money by refinancing. I mean, I don't think that was something that was bad. And by the way, there was some critics, and there was also plenty of people that appreciated what we did. We got a lot of calls and refinanced a lot of people from that.
Rick, 10 seconds. Is what the government's doing today in Congress and countrywide and all these discussions, is that going to change the outcome?
Yeah, I think it will help. It will certainly help some borrowers who are in deep trouble on the margins. It's going to do very little, if anything, to help the broader housing market.
Lingering effects of the mortgage mess continue
to be a thorn in the side of all the financials. UBS slashing jobs and selling off assets, but is there a silver lining to that story?